Welcome to this video, which is all about having a daily routine to maximize the profit potential of your trading signals and also keep losses to a minimum. Now, I think as traders, we need to analyze daily, we need to have a set schedule, we need to follow it. Now, I'm going to give you my schedule here. And basically, I'm not saying my way is the only way to do it, but hopefully you'll pick up some tips that you can use daily in your own analysis, which will help you maximize the profits on your strategy, keep those losses to a minimum. Now, in terms of the way I analyze the markets, I have a set time each day that I do it, and it is the London Open, okay? And I think you need to have a set time of day that you have allocated to do your analysis. Now, I don't think it matters what time of day you actually do it. I mean, okay, I picked London Open. You could pick New York Close, New York Open. I don't think it matters. I just think you just need to be consistent with the time of day that you do your analysis. There's no better time of day. I read a lot online about it's the best time of day to do it. No, there isn't. You just want to be consistent, have that daily schedule. Now, in terms of when I do my analysis, what I normally do is I will sit down for 5 minutes, which will clear my head. Then I will go straight to the charts. And what I will do is I will basically want to decide what I'm going to do with that chart, normally within a few seconds. I don't allow myself much time. Now, if you've got a simple strategy with an edge that you're confident in, then you shouldn't need to think about the chart at all. It should come instantly to you. It should be an instant reaction. I found in the past that when I dwelled too long on a chart, I would just see something that wasn't there. And when I put the trade in the market, I wouldn't be as confident in it as if I'd have generated a decision quickly. There is no merit whatsoever, in my view, in thinking too much about a chart. If you have to think too much about it, you're overanalyzing, your strategy is too complicated. You need, in my view, to go back to basics, simplify your strategy, and quicken the decision-making process. Now, in terms of the amount of charts I follow each day, it is 40 different pairs. Now, because I can do the analysis quickly, that doesn't take me too long. And I find a lot of traders, they don't want to follow too many pairs. They have favourites, or they believe that Euro USD is the best pair to trade. Sometimes it's a good pair to trade, sometimes it isn't. All pairs move to the same inputs, okay? However, if you follow a wide range of pairs, you're going to get more high probability setups because, of course, pairs go through periods where they range trade or they don't do very much or they're trending strongly. You want markets that are trending strongly. Focus on those. So it's the more pairs the better. Once I've decided the pairs that I think are good, I basically then look for correlation. So if I've got 3 pairs that are likely to move the same way together, I won't trade all those 3 pairs. I'll pick the one out with the best risk to reward. What I try and do is try and keep the number of pairs down that I've got in the markets. So I will never normally have more than 8 pairs open. It's normally about 6, and that for me means that I've got the highest probability ones in the markets. I'm not trading correlations, or I'm not trading also ran pairs that I don't really believe in. Now, in terms of when I've got my pairs in the markets, what I will do is before I put them in, I will basically work out the lot size by how much I need to risk to stop. So to give you a simple example, if I'm swing trading a pair, let's say it's got a 100 pip stop, that will have double the lot size normally of a pair, let's say I'm trend following, with a 200 pip stop loss. What I'll always do is I'll work it out from my stop loss what my lot size should be. Each day I will also work out how much I will lose if all my trades go wrong at once. That means I lose on everything that's open in the markets. And that, for me, normally needs to be below 10%. Okay. Now, one thing that surprises me is a lot of traders just do not do that. They do not know what their maximum exposure is if everything goes wrong. You need to know it. I mean, it's happened to me numerous times. Every pair that I've had open in the markets, has gone wrong. So you need to start from the worst eventuality, that your drawdown is going to be comfortable, that you can come back from it. And in terms of each day, I will normally update each trade that I've done. So trades that are open in the markets, I will look to see if they're doing what I think they should do. And I'm normally looking for movement quickly in my favour. If a trade just literally hangs around and doesn't do anything, if I've got a small profit on it or maybe a small loss, doesn't matter. I will take out that trade and use it in a market that is moving. I don't want to be trading, when trading conditions are flat. I want moving, volatile markets. So I'm quite happy to take a position out, move it somewhere else. In terms of if a trade is coming to profit, I will, normally update my stop loss. So I'm looking if that can be moved up to lock in profit. I won't move it for the sake of locking in profit. I want it behind a level. If I think that I need to take some profit, I will normally take half out, okay? Leave half in. I do that frequently. Let's say a market's gone to overbought. The trend still looks up, and I'm just a little bit, weary about it. I might just take half out, bank it, let the other half run with a stop. So what I'm trying to do is tuck in profit all the time to cushion myself. In terms of the sort of philosophy I've got of trading is, I don't ever want to fall too far behind, okay? And I work on the basis that I am going to get big winning trades. I just want to stay even or as little loss as I possibly can have, and then the profits will basically take care of themselves. I know my strategy is going to catch big trends over the long term. In the short term, obviously, I could be in a period where not much happens at all. But the idea is just always to keep the equity intact. And I think in terms of if I lose, let's say I lost on all my open positions and dropped 10%, I wouldn't immediately come back to the market. So I'd probably have a day or two off where basically I cleared my head, then I'll come back. I also will not come back and try and basically get back to where I was before too quickly. It's a huge mistake traders make. They'll keep the same position size, they'll try even harder. I won't do that. What I'll normally do is I'll try and come back slowly, so I'll vary my risk to the downside. So I'll take less risk when I'm losing, get off the drawdown. When I'm in profit, there is a certain amount of money. When I reach it on my trading account, I basically allocate that portion for a possible big hit. And by big hit, that means I'm basically going to up my risk on a particular high probability trade if I've got a conviction about it. Now, I won't just do it for the sake of doing it. I have to see something I really like. But that enables me to basically take a bigger risk, coming out of profit. And, I can still, if I lose it, I'm going to be where I was before. If I win, I'm further forward. And that's really the philosophy of Vic Spirindio, where basically what you're trying to do is build capital up and then hit what he calls home runs, high probability trades. Now, in terms of the weekly routine, that is what I do on weekdays. Weekend, I've got my weekly charts out. I want to see the weekly support and resistance levels. See if they line up with daily support and resistance levels. If they do, it makes those levels more significant to me. I consider them more valid in terms of trading off them. So I always like to have the big weekly charts to back up the daily charts. You really can see the big picture from the weekly charts, which is just you can't see on the dailies so well. So it just gives you that bit of extra confirmation and confidence to trade off levels on the daily charts. In terms of the fundamentals, I really keep in mind that the big fundamentals drive the big trends. So I do keep an eye on the news. Now, it's not for everyone. A lot of people just like trading pure technical analysis, but I like to keep abreast of what's going on the news wires. So I'll check the major news sites like Reuters, Bloomberg, MarketWatch, CNBC. Also check sites that I know retail traders like, the really popular sites like Forex Factory, dailyfx.com. I want to see what the sentiment of the market is, from basically people writing on Reuters and Bloomberg, for example, to retail traders on daily FX or Forex Factory. What I don't like is if I see a trade that everyone thinks is obvious or it's a surefire trade. If I see that, I get very nervous about being in the trade because, obviously the majority lose. I also like to look at the news and see what people think are surefire trades in terms of putting in a contrary trade against the majority. And I've always worked on the basis that, the more uncomfortable a trade is for me to do against the majority, the better it's probably going to be. Never do the comfortable trades, in my view. Now, in terms of sentiment, get it a lot from the newswires. I also like to check out CFTC net traders positions, which give you a snapshot of what the speculators are doing and the smart money commercials. Now, I've done specific videos on the CFTC net traders. For me, it is the best free tool in Forex trading. It's given me some fantastic trades over the years, and it really does give you a really good look at sentiment, what the speculators are doing, smart money commercials against them, trade with the commercials. So really mine is a mixture of technical analysis, like to know the fundamentals as well, because they give me a deeper insight into the chart in my view. Now I know that's not for everyone. A lot of people just like to trade purely technically. Now, in terms of each week, I also like to get a bit of education each week in relation to keeping me focused on my trading strategy, my trading plan. Now, my strategy has been set there for near enough 20 years. I'm not changing the way that I trade the markets, but I've always believed that you have to stay very, very focused on what you're doing. You have to keep those emotions in check. So I like to read up stories to motivate me, inspire me, keep me on track. So I read books by the great traders, their life stories. I also read a lot of books on mindset, as you can probably see behind me, because I've always believed that we can all make money from the Forex markets if we have the right psychology. We only need a simple strategy, but we must never ever let our guard down. We must always trade with discipline. We must always trade with a positive and confident attitude and stick to our plan. So that is my daily routine, obviously what I do weekly. I hope you found the tips helpful and you can use them in your own daily schedule, and hopefully they will maximize the profits from your trading strategy. Thank you for watching me as per usual. Take care and have a good day.